Hello everyone, welcome to EduTap and welcome to the Phenomics session. In today's session, we are going to discuss a very important concept, that is the central bank digital currency. This is a very important concept from the examination point of view, and the RBI has released the complete framework for the central bank digital currency. The RBI has released regarding the type of the digital currency, the form the digital currency will be in, as well as the mode of issuance for the digital currency, the mode of management for the digital currency. So all of this has been released by the RBI, the complete framework for the central bank digital currency. And in today's session, we will know all about the central bank digital currency. We will have the complete clarity about the central bank digital currency and the framework that the RBI has provided. But before starting with that, there is a big announcement from EduTap that EduTap has brought for you the comprehensive guide for the RBI Grade B and SEBI Grade A. So you can get all the information regarding the exam and the preparation. If you want to know about the pattern of the exam, if you want to know about the previous year cutoff of the exam, if you want to know about the syllabus of the exam, all of this information is provided in the single guidebook. Even if you want to know about the preparation of the exam, the sources for the exam, the strategy for the exam, all of that is provided through a single guidebook. Your effort, your time will be saved. You do not have to visit different links, different website to get the information, because all the information regarding the exam and the preparation is provided in this single guidebook. So you can just download these free guidebooks that are provided in the description box below. So they are absolutely free of cost, and the link is provided in the description box below. Do download these guidebooks. They are going to boost your preparation. They are going to boost the level of understanding for the examination. So now starting with the concept, that is the central bank digital currency. So Finance Minister Nirmala Sitharaman, she announced in the Union Budget for 2022-23, that is the recent Union Budget that has been released. In that, Nirmala Sitharaman, that is the Finance Minister, she announced that the central bank digital currency will be released, will be introduced by the Reserve Bank of India as the India's official digital rupee. So the introduction of the CBDC, it is considered that it is going to give a big boost to the India's digital economy. Both the government and the Reserve Bank of India, they both are continuously trying to convert our economy, to lead our economy to a cashless economy, to a digital economy. And the CBDC is considered to provide a big boost to the India's digital economy. And to now, the Finance Minister, she announced that the RBI is going to introduce the CBDC, and in that context, the RBI, the Reserve Bank of India, released a concept note on the central bank digital currency, in which the central bank digital currency, the whole framework, that how it will be introduced, in what type, in what form it will be introduced, everything is introduced in this concept note. So we will understand everything, the motivation behind this central bank digital currency, that has been explained in concept note, the form, the type, the mode, everything we are going to discuss, that RBI has provided in this complete framework regarding the central bank digital currency. So starting with, first of all, what is central bank digital currency? So central bank digital currency, it is a digital form of the currency notes. So you all must have seen the 100 rupee note, the 50 rupee note, 20 rupee note, the 500 rupee note, 2000 rupee note. So they are the currency notes that are issued by a central bank, by the central bank. So the CBDC, that will be the digital form. It will be the digital form of these currency notes. Okay. So the currency will be released in the digital form. That will be called the e-rupee, for the central bank digital currency of India. Okay. Now this e-rupee is substantially, it is not at all different from the banknotes. It is just faster, easier and cheaper currency management system. As well as it is not going to replace the cash. The cash is going to flow in the economy, but it is going to be providing an additional method for the payment system, we can say, for the transactions. Okay, so the e-rupee, it is not going to at all replace this cash. It is just going to provide an additional method, because of course there are many people that do not have much knowledge about the digital system, do not have much knowledge about the digital platform and all. So it is not going to replace the cash for now, and it is going to take some time to adopt for the people that are in the rural area. But if it is adopted well, we can say that it is going to change the face of India and it is going to take India to a proper digital economy. Okay. So this e-rupee is substantially at all not different from the banknotes. It is a faster, efficient, cheaper currency management system. Like if you want to release the currency in the physical form. So this is the currency in the physical form. If you want to release the currency in the physical form, the printing cost is there. Then the cash has to be distributed among the banks to provide it to the public. So the distribution cost is also there. But in case of e-rupee, there is no printing cost that will be taken. There is no distribution cost that will be there. So the operational cost will be reduced to a great manner. So this e-rupee is going to be cheaper currency management system. It is going to be much cheaper than the cash that is released by the RBI. It also has all the transactional benefits of other forms of digital money. So now the features of CBDC, the central bank digital currency, it is a sovereign currency that is issued by a central bank. Okay. It appears as a liability on the central bank balance sheet. So here you can see that this rupee note, this note has been guaranteed by the central government. It has been guaranteed by the central government, but the governor of the RBI, it is saying, the governor of the RBI is saying, I promise to pay the bearer the sum of 500 rupees. So here you can see the liability is of the RBI, the liability is of the central bank, though the guarantee is of central government. Okay. So the liability comes to the central bank, and it is the notes comes under the balance sheet, liability side of the balance sheet. Must be accepted as a medium of payment, like the cash that must be accepted as medium of payment. Similarly, the e-rupee will also be accepted as medium of payment. You can pay through the e-rupee. Okay. It will be a store of value, like the rupee note. They, like whatever cost it has been to make this rupee note, it carries the 500 value because it is guaranteed by the central bank. Similarly, the e-rupee will also have the value. It will also have the store of value. It can be used in the future also. So it will be having the store of value also. It will be freely convertible against commercial bank money and cash. So you can change the e-rupee into the cash also. It will be fungible legal tender for which holders do not have to have any bank account. So like the cash, you do not have to have the bank account to have the cash. Many people in the rural areas, they do not have the bank account. Many kids do not have the bank account. Still they have cash with them. Okay, like the allowance they have. So they can have, similarly, they can have the e-rupee without having any bank account. So e-rupee will be provided without any bank account also. It will be provided in the offline mode also, but like the statement is not very much out regarding that. Expected to lower the cost of issuance of money and transactions. So you can understand that the cost of issuance will be reduced. There will be no printing cost for the e-rupee, as well as the transaction cost will also be reduced. So now motivation. It was given in the concept note that the motivation of releasing this central bank digital currency, first is operational cost. The operational cost will be reduced. Like the operational cost is quite high. It is involved in the physical cash management, because printing of the cash, the protection of the cash, the distribution of the cash is needed. But the operational cost will not be as much as in the e-rupee. It will bolster the financial inclusion, bring more resilience, efficiency in the economy, innovation in the economy. So it will be more efficient. It will bring more efficiency to the settlement system. It will bring more efficiency to the settlement of the payments. Okay, boosting the cross-border payment space also. So the cross-border payments can also be done through the e-rupee. Soon there will be such thing also. So it will be quite faster. As well as, see what was happening, that there was private digital currency that was released. The cryptocurrency was there, the Bitcoin and everything was there. So people were moving towards this private digital currency. People were, even many Indians, they were wanting to hold this digital currency. So it was the responsibility of the Reserve Bank of India to bring the central bank digital currency, so that it can replace the private digital currency. And that's why the central bank, the Reserve Bank of India, had to take the step to bring the central bank digital currency, because the private digital currency was becoming very popular. What was the problem with the private digital currency? Let it be popular, but the private digital currency, it is decentralized. That is, there is no basis for that. Where it has been originated, no one knows that. So even if it vanishes, no one knows that where it has been originated, where the basis. So no one can blame, who to blame, like when there is no originating point of the private digital currency. As well as what is happening, that it is deregulated. No one is there to regulate it. No one is there to regulate it. So even if the company is vanishing, even if the cryptocurrency is vanishing, even if the customers are harmed, no one is there to regulate it. Okay, so the RBI thought that we need a central bank digital currency, so if the people's need of the digital currency is met, but the central bank digital currency is centralized, that is, the Reserve Bank of India is there to take any kind of blame, is there to take any kind of responsibility, as well as the central bank digital currency is also regulated by the Reserve Bank of India. So we know that, okay, Reserve Bank of India is there to support us, to take care of us, to take care of this digital currency. Now, if the private digital currency becomes very popular, there is one more problem that comes. That is the monetary system of the country destabilizes. How? Let's say that the Central Bank of India wants to decrease the cash flow in the country. It wants to decrease the money supply in the country. So why the RBI wants to decrease the money supply? To decrease the inflation in the country. The money supply is decreased so that less money is in the hands of the people. Money supply is decreased so that less cash is in the hands of people, so that people demand less. When demand is less, the prices will be less, inflation will decrease. But what if the cash has been reduced, but there is too much private digital currency that is going on, and this private digital currency is being used to demand a lot, and the demand is continuously increasing because people have too much private digital currency with themselves. So the inflation will not be stopped by the RBI, and the monetary system will start destabilizing because there is the private digital currency that is not being regulated at all. So you can understand that the whole financial system of the country can go down if this private digital currency is not stabilized, it is not regulated, and that's why to cancel this private digital currency, the RBI brought the central bank digital currency. So I hope you have understood this. This central bank digital currency is also very important from the descriptive point of view. Okay. So now coming to the types. First is the wholesale CBDC that will be provided to the big institutions, to the financial institutions. Okay. So the wholesale CBDC is designed for the restricted access to the select financial institutions. That is, the wholesale CBDC is intended for the settlement of the interbank transfers, especially for the interbank, because it is between the banks that most of the transactions are happening. Okay, more like they are giving the loans to the other banks also. The deposits, my deposits, I am sending it to the other bank. Lakhs of people are sending the money from the HDFC bank account to the SBI account, let's say, to other account, let's say. So there is much settlement that has to be done interbank. So that can be solved through the wholesale CBDC in real time. In real time, the payments can be sent through the digital rupee. So the banks will not have to send the cash to the other bank. Simply they can just sit at their place and through the digital format they can send the money. So you can understand that how efficient it can be. Okay. Related wholesale transactions can be done at seconds. So now you will say that UPI was there for that, na? Why the UPI is there? Like when we will do the retail, especially coming to the retail, let's do the retail one. The retail CBDC is an electronic version of the cash that is primarily meant for the retail transactions, for the small transactions, for the retail transactions. Retail CBDC would be potentially available for use by all the people, the private sector, the non-financial consumers and the businesses. So the consumers can easily use this retail CBDC that will be provided to the simple consumers. Okay, so we can use the retail CBDC. But again, you will say that we were using the UPI easily to transfer the money. We were using the UPI now. But see, it has limit of the amount of transaction 1 lakh only. Per day, you can only transfer 1 lakh. The number of transactions are also limited. Like you can only do 20, I guess. So 20 transactions can happen only in 1 day. But in the e-rupee, like the cash, you have hundreds of 500 rupee note. No one can stop you to transact that, to use that. Similarly, the e-rupee, how much e-rupee you have, you can use that. How much transactions you are doing, you can use that. Hundreds of transactions you are doing in 1 day, you can use the e-rupee. This is just the substitute of cash, we can say. This is just the cash that we have. The e-rupee is the cash that we have just in the digital format, we can say. So you can understand that this will be a way better method than the UPI. And for the UPI, the banks are involved. From the HDFC bank, you are sending the money to the SBI bank account holder. Let's say I am the customer and I am sending the money to the merchant because I have bought some bread. So I have to, my account is HDFC, his account is SBI. So I'm sending the money to the SBI account from my HDFC account. So the processing will take place. In the processing, there will be 2 to 3 seconds, 4 seconds, 5 seconds that will be involved. And the transaction can go down also. But in the e-rupee, there is no such processing that is happening because the bank accounts are not there. Because the bank accounts are not involved. Even if you do not have the bank account, you can still use the e-rupee. So the processing will be much smoother, simpler, faster. I hope you have understood this point also very clearly. For the UPI, the bank accounts are involved, the banks are involved, the transaction is taking place. In the e-rupee, the transaction is taking place without bank accounts. It will be faster, easier, and there will be no such kind of thing that the money is not going in most of the cases. The Reserve Bank will soon commence the pilot, and one of the pilot survey has already been launched. Okay, so here we have seen that the specific uses. The specific use cases are there, that who will be using. The banks will be using, or the customers or the private sector will be using it. So the different CBDC, the different central bank digital currency is there for the banks. Different CBDC is there for the customers, for the private sector. So specific use cases, the pilot survey, the pilot launch will be happening, and recently a pilot launch has happened for the wholesale CBDC, where there are some banks that have joined this wholesale CBDC pilot launch. So this we will do in the finance current affair part, but I was just trying to tell that Reserve Bank has started this pilot launches. Okay. So now coming to the form of CBDC, it can be token based CBDC, like the tokens will be provided to you, that will be like the banknotes. So one token can have some value. So token based CBDC is a bearer instrument like banknotes, meaning whosoever is holding the token at a given point in time would be presumed to own them. Like if I have 2000 rupee note, that means it is mine. If the person has a token worth 2000 rupee, so that means that person has 2000 rupee note, or that person has the digital form of the money. So the token is just like the cash, you own them. Okay, you own them if you hold them. Simple. If you hold them, then you own them. In the case of the account-based system, this will be specially for the intermediary verifies, and this is specially for the banks. Okay, for the financial institutions. It would require maintenance of record of balances and transactions of holders. Let's say the HDFC Bank had the e-rupee of 1000 crore. 1000 crores, and the SBI Bank had the token of 1000 crore. Okay, so 1000 crore, and it is having 1000 crore something. Yes. So here what will happen, that the SBI has to give the HDFC 100 crores. So it can just send it through the account based system. In this, the maintenance of record of balances is kept, and transactions of all holders of the CBDC and indicate the ownership of the monetary balances. So whatever is the balance left, like the HDFC also have to give 100 crores to the SBI. The SBI has to give 200 crores to the HDFC because the transaction is continuously happening. So by the end of the day, the monetary balances will be seen, that how much transactions is needed between the both and how much monetary balance is left. So that will be kept with both the banks. So the account-based CBDC is an intermediary, verifies the identity of the account holder. So in the cases of big institutions, the financial institutions, this kind of account-based system will be needed, in which the record will be kept of the balances of the transactions, and at the end of the day, how much ownership you have the monetary balance, that ownership is yours. Okay. So next is a direct mode. Now coming to the mode of issuance and the management of CBDC. So mode of issuance, it can be direct model, it can be model of issuance. So it can be a direct model in which the central bank will have all the responsibility to issue, to distribute, to account keep, to verify the transactions, even do the KYC and everything. All the responsibility will be of the central bank. So here in this model, the CBDC represents a direct claim. If you have any complaint, you will complain it with the central bank, because central bank is the one that is doing everything, that have all the record of all the balances and updates it after with every transaction. So the central bank is the one that is doing everything. The RBI is the one that is doing everything. You can see here account keeping and everything is done by the RBI in the direct model. And the RBI has the responsibility to handle the complaints also, because RBI to handle the direct claim on the central bank, because it has all the record of all the balances and it is the one that updates it all. So next is the indirect model. This is in an indirect model, the central bank and the other intermediaries. Now intermediaries are what? It is the banks or the other service providers. Each play their respective role. Like the RBI is the head that issues, the RBI is the one that issues the currency, and in this also the RBI will have the role of issuing the e-rupee, and the intermediaries are the one that will be keeping the record. Okay, so in the indirect model the roles are completely defined. Like the RBI is the one that will issue the currency. So in this model the central bank issues the central bank digital currency, that is e-rupee, to consumers indirectly, like through the intermediaries. And any complaint by the consumers is managed by the intermediary. So the RBI is the one that issues the e-rupee in this model, and it issues the e-rupee and it provides the e-rupee to the intermediaries, that are the banks. Now the banks will distribute this e-rupee to the consumers, to the people. Okay. So the claim, now the people are connected with the banks or the intermediaries. So we will raise our complaint where? We do not go to RBI. We go to the banks. So here any complaint has to be raised with the intermediary by the consumers, as the central bank only handles wholesale payments to intermediaries. So the RBI is issuing the e-rupee, it is providing it to the banks or the other intermediaries, and the banks are the one that are providing it further down. Now the indirect model is similar to the current physical currency management system, wherein the banks has to manage the activities like the distribution of notes to the public, the account keeping, the KYC to see that the anti-money laundering and everything. So the RBI is the one that issues the e-rupee to the banks or the other intermediaries, and the banks are the ones that spread it to the consumers, to the public, as similar to the physical currency management that is happening currently. Okay. So now hybrid model, in which the RBI is issuing the everything, like issuing the CBDC, as well as the RBI is also record keeping. So it is a hybrid model of both, that direct claim, as the RBI also has the record keeping, the RBI is also keeping the record. That's why the direct claim can be raised with the central bank. So you can read this. This is the summary that is provided by the RBI. The liabilities of the central bank in all the models. The issuer is the central bank. Here also the indirect also the central bank issues and the intermediaries distribute it. In the hybrid also central bank issues and the intermediaries distribute it for the retail use. Operations, central bank is the one here that do all the operations. Here the intermediaries are the ones that do most of the operations. Hybrid intermediaries are the ones that do the operation. Operation is what? Keeping the records, keeping introducing everything, doing the innovations and everything, like the other operations other than issuing. Ledger, that is keeping the record. The central bank is the one that does it in the direct, because everything is done by the central bank. In this, the record keeping is done. In the indirect model, the record keeping is done by the intermediaries. In the hybrid, the ledger or the record keeping is done by the intermediaries as well as the central bank. So considering the whole of this, the indirect system is considered as the best, because for the cash also we use the indirect system. For the e-rupee also we should use the indirect system. This is what it has been said. So now you will be thinking about the settlement finality. Settlement finality is what? So see, it is like I have promised you that I will pay you in the future. I have promised that, and it is determined that the settlement of this much amount of 100 rupees has to be done. Now I have not paid you, I have just determined the payment that this much I will pay you. So, but now what has happened, I have become insolvent, I have no money with myself, not even 1 rupee. So settlement finality means that now the central bank knows that this kind of promise has already happened. So when the central bank has all the record, so the central bank will say that you have to pay. So that is settlement finality. So you can read all of this, that when the settlement is determined, it becomes final and irrevocable. You have to pay even if you have become insolvent. So the system provider can use the collaterals to take out the money. So that is settlement finality, because the RBI is the one that knows that this kind of thing has happened, this kind of promise has happened, because the RBI is keeping the record. Here the RBI is not keeping the record, so RBI do not know that what is going on, and the intermediaries do not have that much power to do the settlement finality, and that's why here the settlement finality is not there. Again, here also the central bank also has the records, so the people can directly say that you have the record, you know that we had this kind of promise. So settlement finality is where the records are there with the central bank, because central bank can directly see that okay, this kind of promise has happened, this kind of thing has happened, this much balance should be with the provider of the money. Okay. So this is settlement finality that you can read here. It is a complicated concept. I have tried to explain you in the simple words. If the central bank has the record, so central bank knows that this kind of promise has happened, this kind of settlement is determined. So the central bank makes it that the provider of the money, the person that has given the money, actually receives the money. So that is under the central bank, when the central bank has the record. Okay. So here you can also see that no other law will be in effect if the central bank has the all the like papers and all the information. So other law cannot say to me that my money will not be returned or something. Okay, so the law will not be there. So now coming to the instrument design, what will be the design of this CBDC? Will it bear, in simple words, will it have interest rate? So designing a CBDC that moves away from the cash-like attributes, CBDC may have potential for disintermediation. So if the CBDC, that is e-rupee, if there is some interest that is also provided in this, so we will not need to open a bank account, because we are getting the interest on the e-rupee that doesn't need a bank account. So why will we want to open a bank account? Why will we want to go to the bank and deposit the money? It is a cumbersome process. We will just have the e-rupee and without a bank account, and the interest is given on that. So to stop this kind of mindset, what will happen, that the people will stop opening bank accounts. People will stop going to the banks for doing the demand deposits or something. So what will happen, disintermediation will happen in the financial system. Disintermediation means the banks that are the intermediaries, they will lose their job. Okay, resulting in loss of deposits by the banks. The banks will not get the deposits. If the banks are not getting the deposits, they will not be able to do the credit creation, impeding their credit creation capacity. So they will not want to, if they do not have the deposits, how will they give the loans? If I am getting the 100 rupees, then I am giving the 90 rupees to the other person as a loan. So if they will not get the deposits, they will not be able to do the credit creation in the economy. So that's why the interest, the e-rupee do not have any interest, because it is the just like cash. Like cash do not have any kind of interest if we just keep it with ourselves. So if we keep the e-rupee, in considering that physical cash does not carry any interest, it would be more logical to offer non-interest bearing central bank digital currency. So I hope you understand this point very clearly, that like cash, if we keep it with ourselves, it doesn't give any interest. Similarly, if the CBDCs, e-rupee, we are not keeping it in any bank account, it will not give any interest. It is a complicated kind of notification that has been released by the RBI, and the concept can be complicated, but just you have to have the basic understanding of this. You do not have to go too much in there. I hope you have got the basic understanding. Okay, so if you have any query, you can mail us here, or you can contact us through this number. The PDF will be provided through the Telegram channel. So do join the Telegram channel. If you want a new session with the questions and with more elaboration of the central bank digital currency, do comment in the comment section below if you want one more session on the central bank digital currency. Okay, so thank you very much everyone.